services can be taxed in international trade. We talk a lot about the tariffs or taxes that a country places on physical goods such as steel, aluminum, and automobiles from other countries entering that market. But what about the apps, software, and streaming services that you beam across borders? They are often done through a digital services tax instead of tariffs. Hi, I'm Dr. Sarita Jackson, global trade researcher and strategist. If you're new here, thank you for joining us. This is the space where we talk about international trade policy and practices designed to help exporters such as yourself to navigate what is going on when it comes to the global economy. Under major trade agreements such as the US-Mexico-Canada Agreement or the USMCA, the three North American countries have agreed not to impose customs duties on digital products such as software, video, or music transmitted electronically. You don't pay a tariff at the digital border. However, that same agreement has a loophole. It explicitly says that the ban on customs duties does not prevent a country from imposing internal taxes, fees, or other charges on those digital products if they are imposed in a way that doesn't discriminate against digital products produced outside of that country's domestic market. Enter the digital service tax. Since countries can't charge a duty or import taxes on digital products at the border, some implement a tax on the gross revenue a company generates from users inside their country. This often targets advertising revenue, user data sales, or subscription fees. The US government views these as trade barriers or digital protectionism designed to target American tech companies. For a real-world example of how this is playing out in 2026, look at the Southeast Asian country of Malaysia. In the new US-Malaysia Agreement on Reciprocal Trade announced just months ago, Malaysia agreed to refrain from imposing digital services taxes or value-added taxes that discriminate against US companies. Why was this necessary? Because without that specific clause, a country could technically comply with liberal trade while also taxing the data flows and digital revenue of firms located across borders and overseas while leaving domestic ones alone. The takeaway? Just because your product or services are digital, it doesn't mean that it's